Fractional ownership, democratizing high-value assets. For a long time, high-value assets like commercial real estate, luxury properties, fine art, private jets, and even rare collectibles were accessible only to the ultra-wealthy. If someone wanted to invest in a premium office building or a luxury villa, they needed crores of rupees. For most middle-class investors, these opportunities were simply out of reach. But today, that is changing. A new investment model called fractional ownership is transforming how people invest. It is breaking large assets into smaller ownership units, allowing multiple investors to collectively own a portion of a high-value asset. Fractional ownership means that instead of one person buying a 10 Indian rupees crore property, 100 people can invest 10 Indian rupees lakhs each and own proportional shares. Each investor earns returns based on their share of ownership. This concept is democratizing access to premium assets. Earlier, high-value commercial real estate was dominated by institutional investors and wealthy individuals. Now, through digital platforms, retail investors can participate with smaller amounts of capital. Fractional ownership is especially popular in commercial real estate. Investors pool money to purchase office spaces, warehouses, or retail properties that generate rental income. The rental earnings are distributed among investors according to their ownership percentage. Additionally, if the property value increases, investors benefit from capital appreciation. This model is powered by technology and online investment platforms that manage legal structures, compliance, asset management, and distribution of returns. Fractional ownership is also expanding into other asset classes. It is being used in luxury vacation homes, aircraft leasing, renewable energy projects, fine art, and even rare collectibles. For example, platforms allow investors to buy fractional shares in premium office spaces in cities like Mumbai or Bengaluru, making high-quality real estate accessible to more people. The biggest advantage of fractional ownership is accessibility. It lowers the entry barrier to high-value investments. Instead of needing crores, investors can start with lakhs. Second, it provides diversification. Instead of investing all money into one small asset, investors can spread funds across multiple high-quality properties. Third, it offers professional management. The asset is managed by experienced firms, reducing the burden on individual investors. Fourth, it provides passive income. Rental yields from commercial properties can offer stable cash flow. However, fractional ownership also has risks. Liquidity may be limited. Selling a fractional share may take time compared to selling stocks. Market fluctuations can affect property value. There are also regulatory and legal considerations that investors must understand. It is important to conduct proper due diligence before investing. Fractional ownership represents a broader trend in finance, democratization of wealth-building opportunities. Technology is enabling ordinary investors to access markets that were once exclusive to the wealthy. In many ways, fractional ownership is similar to how stock markets allow people to buy small shares in large companies. Instead of buying an entire company, investors buy a small piece. Now, the same principle is being applied to real estate and other physical assets. In conclusion, fractional ownership is reshaping investment landscapes. It is making high-value assets more inclusive, accessible, and diversified. While it carries certain risks, it offers a powerful opportunity for investors who want exposure to premium assets without massive capital requirements. The future of investing is not just about owning everything alone, it is about owning smarter, together.